Try this. The internet's been bad in Kansas all over. I had trouble with the military college too. All right. Sorry. Here we go. Hey, I want to just highlight all these blue circles are places where the RL10 crossed the baby dragon on the way down. First leg down, a brief recovery, and then another second leg down. So you should be paying close attention to that as an early warning for a change of swing conditions. You should also be paying attention, I would say, to the, I'm going to make this a red circle. All these locations where the RL10 itself changed directions. The crossing of the baby dragon is like a confirmation of that. So here's where that RL10 is. Would not be surprising to see it reverse down here. The most reasonable expected move would be for a retest over here to the 30-day low. If you loved this as a critical state with a big move in either direction, then you would love this as a big move in either direction. So that we're going to see a ton of things that fire on the channeling. Sorry if I sound a little distracted. This crown just broke, and it is excruciating. All right. Quick look at the sectors. The S&P was down 3.5. Diamonds were down 3 1/3. Russell down 3%. Treasuries were up just a fraction at 0.09. The sectors that worked at Mexico, healthcare and consumer discretionary, still each down about 3%. Materials at 2.8. Ackman's hedge fund down 2.6. Finance, emerging markets, and clean energy down 2.5 to 2%. Commercial real estate 2%, and Japan 1.36. So even the best of sectors all suffered significantly today. Only VXX in our stack really paid off. On the downside, big negatives. Again, the S&P down 3.5. Silver, energy, and tech down 4.25, along with the FANGs down 4%. That's vaporizing a lot of money right there. Oil down 5%. Brazil 5.5%. Oil exploration 5.6%. Wheat and precious 7.3%. And the triple techs 11.7% and 13% respectively. And then a lot of big names got assassinated today. U.S. Steel, Devon Energy down 7%. Google, Twitter, Microsoft, Apple, Tesla, all down more than 4%. So big losses. The Bezos fortune and Amazon down 3 3/4. So again, we're going to see an awful lot of channelings firing from this location. And I think the most likely response is going to be a test of the 30-day low at 320. And that could set up the mother of all buying opportunities again. But really, between now and the election, what's the compelling reason to get long? So again, the strategy for tomorrow is going to be no swing trading, hybrid frogs only, play it hard in either direction, get with the big movers, get the market direction right first, and then pick these volatile trenders. Here's an example of what some of those look like today. Well, this was what I did early in the morning. This was Tesla. And so this had a big gap down, sold off harshly, gave me a supported spring crossing with an entry at 409, a second position at 413, and this got up as far as 420 before collapsing. And then the rest of the day was just playing collapsing dragons on the downside. Here was U.S. Steel. This is where the big collapses occurred around lunchtime, going from 965 down to 935. So there were some nice collapsing dragons in here, and here, and here. Hybrid frogs in Wheaton paid off with shorts in here. And then that first big slide just paid for the day. Devon Energy, one of our favorites again. Here's a collapsing dragon down, and here's a kata number 2 for a nice supported spring crossing that gave a nice intraday payoff. But again, given the slide of the day, there was very little reason to stick around. Here's a collapsing dragon in Cliff Natural Resources here from 810 sliding down to 790, and then a kata 3 move, but again, not much follow through. And then a real interesting one here in VXX. So when the market is melting down everywhere, this is the kind of moves that you can get in VXX. So this is about a 25-cent risk box, supported fall crossing, and you get a move from about 26 to 27.5. So that's a $1.50 move on a 25-cent risk. So that's about 6R, just managed in the usual way. And then after the sell-off, finding support, this is now kata 2 with a low and a higher low. And then the supported spring crossing in the usual way, or kata number 2, again, gives you a move from about 26.40 to 27.50. That's about $1. And now your indicated risk box is only about 15 cents. So that's about another 6R potential on a single position. So there's a potential for 6 in the usual way, 6 here, not even counting the collapsing dragon that's available inside here. So these volatile days offer some amazing moves. And as we can see from the daily, those big range moves can happen in either direction. So you get this first a bounce up, a big harsh, and then a big harsh sell off later in the day. So you're actually getting double value on these great big directional days. And that's going to be the value to you of the intraday katas. And I'll tell you, if I had a pair of pliers right now, I would remove that tooth completely. It is killing me. Hope I can get in tomorrow. I got a meeting early in the morning with the commanding general, so I'll probably be in there with an aching jaw trying to talk to him. That'll be fun. All right, let's take a look at the damage for the day. So we remain in bullish normal conditions. Let me let that come up on your screen. Harsh NDX readings deep into the red on the 3-day and 10-day. Now even the intermediate terms are in the low end of normal. ADX has started to become, it got on the upside of 15 again. So when that happens with bearish signaling, that's usually a pretty bad sign. You can see the confirmation here in the risk Z, which has been giving us this warning of these sharp potential volatile moves for a couple weeks now. See, it's deep and oversold, tons of overreactions, tons of channelings, and so there is an argument to the upside in a bull when you have a bull in this much of a sell-off. But times being what they are, I would start that carefully with intraday moves. The 10-day min pains are the ones that sold off the least today. The max pains, no surprise, these had already been smoked earlier this week, and they are just continuing to get slaughtered, especially in the energy complex. The Dow Tactical Summary up next. Hard not to get blinded by all the reds in the NDX. You can see this is just a broad-based slaughter on the on all the sectors and symbols. As you would expect, a ton of favorable auto framers back to the 10-day highs. Lots of 5-day downs, lots of channeling and overreactions. And these are such reliable long side swing trades that if you get a mechanical entry, well, first, that would be kind of surprising given how far the sell-off occurred today. That would be an extraordinary move to the upside to take out yesterday's high or today's high. And the initial stop would be wide if you were using the mechanical trade frame. But that actually protects you by reducing your position size, and it requires a considerable upside move to get you back in. So there's a little bit of safety built into the cake right there. The ETF 30, it's really the same conditions. You have a ton of channelings and overreactions. You're going to see again an enormous amount of red on the NDXs for all the things that were breaking down below their 10-day and 30-day lows. You'll see that on the right-hand side. And again, over a dozen quality symbols there on the auto framer, better than 2-to-1, in some cases 4-to-1. You'll see a lot on the auto framer as well. And this gives you all the mechanical framing data. But again, this is one of those conditions where, given the political circumstances and the volatility and the proximity to the election, that I would not be swing trading until after the election. I'm going to be exclusively intraday trading. Let me say, the only swing trades I might take are to the downside, and if I get a nice intraday move and I want to keep a piece. I suppose something like in Tesla or Twitter, if I could get an intraday entry, make some money on the intraday trade, I might use that to build a longer-term position. But only in those emerging tech leaders would that be attractive. Otherwise, like a little tortoise, I'm going to be hiding in my shell. None of the daily squeezes are better than 2-to-1, and I show that chart just so you can see just how wide and volatile that move was today. So it's no surprise that nothing tests out well on the squeeze. Jump to the NDX summary. As soon as it comes up on your screen, that tells the whole story. That's everything you need to know right there. So this is not a case of trying to hunt and peck for the quality little setup. This is all about the market and volatility right now. Just look at the magnitude of some of those breakdowns. And the other thing to note is that the bigger numbers on the breakdowns are ones that were already weak. So things like Johnson & Johnson had been weak. Healthcare had been weak. And so when that broad-based weakness comes in, it's not surprising when they really get slaughtered. The big surprise to me is silver, though. You'd think as a defensive play that might have some opportunities, but it's really not there. Meanwhile, that decision from earlier in the summer about protecting with treasuries is starting to look sensible. All right, that's everything I got for you today. I'll get that first piece edited out and just highlight this last little section. And I got to find a pair of pliers for this tooth. Swing trading the inverse ETFs. Yeah, Ken, I mean, that's essentially the same as swing trading the market short. I'm still reluctant to do that, as attractive as that might be. I would much rather sleep well at night with no exposure in the market and then try to get my money on the short side intraday. If I was looking at that, however, I think I'd be looking at energy and financials. So yeah, I can't recommend swing trading right now until we get through the election. But let your conscience be your guide. Caveat emptor. All right, guys, that's everything I got. I'm going to go ahead and stop it there and get this processed.